Welcome to Own the Chaos. The stock market is crazy and chaotic.
Oh my God, are you seeing this shit, bro? Tesla closed at $695. What the hell is going on?
Brad and Fat Man Zoom are here to help you own it.
Now with IBM getting here, I think it's just going to come more to the forefront, and people are going to get more and more eyeballs on Salesforce. Should see a really nice move.
Taking it to the suits, being relatable and hilarious.
We got D's nuts in the crew. Every crew needs D's nuts. You know what D's nuts' number one holding is? Big C.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That guy over there is Fat Man Zoom, and we have a new setup. Trying to figure some things out. I'm not quite sure how this is all going to go down. It's going to be a bit of a challenge, but I know that you guys will stick with us. What's up, Fat Man Zoom? How you doing, man?
What's going on? I'm doing all right. Let me shout out our starting five. We got Nate, Funny Pranks Gone Wrong. Am I allowed to use your government name? We got Chris Lav, Primetime DJs, David G, Mohan, PW Coaching, and Shebang. Shebang.
It is quite the shitty day. I am getting wrecked. I don't know about you.
I think that was 6.
Well, there's a bonus one.
We're all getting wrecked. We're all getting wrecked,
but I haven't done anything. I haven't touched anything. I'm not going to touch anything. And I'm not worried about today. I wasn't worried about this week. It's pretty rough, but nevertheless, we're gonna survive through this, Fat Man Zoom.
When are you gonna worry?
I'm gonna worry if we have a second pandemic, and that's about it.
Really?
Yeah, I'm not worried. So again, the big reason why markets are down today, 10-year yields are up crazy, like an astronomical amount, and in the
1.5%.
short period of time. Yeah, but that's astronomical for bond yields.
Yep. Still don't buy it.
Okay. So for me, it's interesting because it is, I mean, part of it is bond yields. And I think a big part of it is, and it's spooking a lot of people. And it's bringing down tech, obviously, for a lot of reasons. And maybe it'll fall back into, I guess, levels in which, and I think they're getting there now. I mean, we talked about this, about reopening place. I think tech's starting to get to a point to where there's almost more upside in tech than reopening place.
Yeah, for sure. The reason why I don't buy it is if you pull up the chart there, if that thesis is true, I think it's a small part of it, but I don't think it's the whole story. And so I'm gonna go against what all the news outlets say, because we know that they're not. You can't always count on them.
Right.
If they were always right, then why are you saying that it's not retail that actually moved GameStop, right? Because they were saying that.
Right.
So the reason why I was looking at the chart, and if you go back to August, it's been in a straight move up. So saying it's up is one thing. So when I read these articles about the interest rates are up, the reality is if you look at the Treasury yield, it's been in an uptrend.
Yeah. And
so that's why I'm like, is it the whole story? Is it everything that's there? And is it really the most important thing? Where I'm worried there's a couple other factors at play there.
Well, I mean, like the thing for me is people are like all worried that we're going to get into a crash or that we're at lofty levels, and the GameStops of the world is what's going to cause the crash. And first of all, we're not in a crash. Let me just be clear: we're 10 points off of the S&P 500 from their highs. Like it's not 10%, 10 points. It's not that crazy. It's just been a weird week. It's been a rough week, and in my opinion, I think it's just a buy the effing dip situation.
Yeah, it absolutely, it feels like it is. I tweeted something about as far as like at what point in the Qs or the S&P do you now believe it's a downtrend? And I think that one of the things we need to consider and the people that are investing need to consider is, well, we can't just blindly aim at something and decide something and then just throw everything else out the window.
Right.
You did that with Tesla.
Yeah.
Not you, but
Yeah.
traders did that with Tesla. When people set their eyes on things, they remove any other opportunity, and they
Right.
tend to be extreme about it. So the people that when the market's running and they're saying it's a crash and the crash is coming and we're in a bubble, those people are extreme. And the people that when it's green, they're like, oh, it's going to keep running. Like, those people are extreme. I think that the most important thing is we talk about having a strategy, having a plan. When the market does come back, this is a huge opportunity.
Yeah.
However, we could be entering into a recession. We could be entering into a bear market. We won't know that, right?
Well, we're coming out of one.
What do you mean?
We're coming out of a bear market.
A recession.
Yeah. Well, I mean, by all accounts, it looks as if.
What's a recession? 4 quarters? Is it 4 quarters in a row?
Yeah.
So
we're working our way out of a recession right now.
So we were 4 quarters in a row negative growth.
I'm not sure if it was 4 quarters negative growth. I mean, we're not green this year yet, so it could be. I have to go back and look.
Okay. Because
we're red on the year right now.
I was not under the impression that we were in a recession. And maybe I'm an idiot for thinking that, but obviously the COVID crash happened. But as far as that was over the course of 2 months, right?
Yeah.
The market crashed and then we were on a move up. We weren't in a trend down. That's kind of my point.
Yeah.
And so the reality is, number one, we've talked about this before. Nobody's going to be able to predict when we go certain ways, right? Like, you can look at the technicals, you can hopefully trust the technicals, create a strategy, and decide when you're going to move on things. But if something's moved 700 to 1,000%, there's at some point got to be at least, whether you call it a correction, whether it's some profit taking, there's going to be some of that. And so the hard thing is determining what we're in now. And I think this is a very interesting time. And I don't want to rule out the fact that, I'm still bullish on the overall market. The reason why is because I think that these companies are still growing, but I think the issue is, as the market is a forward-looking vessel, it's going to be hard to continue these trends up and sort of repeat the growth we've seen over the past year.
I still disagree. I mean, I was actually looking.
Which part did you disagree about?
Just
I
that
think you weren't listening to me.
I was listening. I was trying to do 2 things at once. I'm trying to produce. I'm trying to listen. I'm trying to talk. But I think that when I was so today I was listening to the CIO of BlackRock.
All right, time out. Let me pause you. The last thing I said was, one of the challenging things for the market, because I don't know if it's necessarily a recession, is these companies have massive growth, and a lot of these big tech companies, it's going to be hard to sustain the growth.
Well, yeah, of course it is.
Okay.
But
because we've talked about that before, and
and that's just tech in general. But what I was referring to was the stock market overall, and the way that things are going. So the CIO of BlackRock, just to kind of go back on my thought, he is the largest money manager in the world. He was talking about bonds and how he wasn't really all that afraid of the yields. And a lot of that had to do with just some of the tailwinds that are coming. We have stimulus, obviously reopening. GDP is set to grow by 7% this year, which would be astronomical. 2021, GDP is set to grow that much. We haven't seen something like that since 2018. Now, granted, 2018, at the end of the year, we crashed. So, and the other thing to consider too, which I don't think we're going to crash, but that's just what happened at the end of 2018. I think that, it just makes sense that this is just a simple correction and that we're just going to continue to go higher. Mm-hmm. It's just to buy the F and dip situation. So and I would not be afraid I would not walk away from tech either.
So the dip, are you saying that next week we're good? So you buy now and we're going to continue to see green? There's only a limited amount of cash that people have before it's like, well, I thought I bought the dip, but
yeah, when it keeps dipping.
I
love that meme. That meme's the greatest. It's the best meme ever. No, so I get it. The thing of it is that if you aren't comfortable putting more cash into the market, then that makes sense. But sitting here trying to time the actual bottom, we went through this back in March, and I had thousands of questions about this. Where's the bottom? Where's the bottom? Where's the bottom? I'm not trying to predict it. Every time it comes down and settles down towards the bottom support, I'm just going to add a little bit. And if it breaks that, then I'm just going to add a little bit more. I'm going to continue to scale our way in. I'm not deviating from my plan or my strategy that I've done for years at this point. And given the fact that I've been able to work my way through, and we've been able to work our way through the worst economic contraction we've ever seen, I'd say that this is something that we have little to worry about.
Yeah. Listen, I'm adding to the dip, but a lot of things I'm more of in a holding pattern.
There's nothing wrong with that.
I'm not saying to sell. I think there are good opportunities. We talked about this in the Chaos Crew. One of the things that we've talked about is shifting, really just reevaluating your portfolio, right?
Yeah.
When we were running green, you could really pick anything and it was going to go up. It's important from time to time to look at your portfolio, look at the diversification of your portfolio, and really ensure that it's leveled out, right? Because this happens. Right. We trade, things move up, we add here and there, and then all of a sudden we realize, okay, this stock is 20% of our portfolio. Maybe there's too much leverage on this one side.
Yeah.
Maybe, one thing we realized, and we realized this in the long-term portfolio, I was talking about it in level 3 this morning. I realized it was in like a lot of spec. And I know you moved away from spec to more growth blue chip. I realized just how much my portfolio was leaning into spec, and I didn't realize it. So I had to consolidate some things. So I think I would agree, this is not the time to panic. This is not the time to freak out, but it is the time to evaluate where you're at. All right, what do we have cash on hand? How am I going to use it? And what am I in? And somebody asked us in the Q&A today. They were like, well, how do you decide what you're going to get out of and get into? We talk about these are red zone days, not the time to sell.
Right.
If you believe in a stock and nothing fundamentally has changed, there's no reason to sell. You should look at it as a discount.
Yeah.
Right? So if that's true, cool. But if you feel like I have 2 stocks or I have a grouping of stocks and I need to consolidate, the simple sort of litmus test for me is, well, how much upside do I believe it has?
Right.
Right?
Right.
And so a great example that I'll use for my portfolio is I was in Fastly and I was in Palantir. And I both consider them in sort of the same bucket, like a cloud play.
Yeah.
And I looked at that and I'm like, I look at these similarly. And what are the factors of why I like them? And I could make the argument for either one. I think either one are good to be in right now and are good opportunities. But I felt like Palantir was my higher upside opportunity with things going on with ARC. And with the partnerships they've created, I really like it. Doesn't take anything away from Fastly, but I had to pick one.
Yeah.
And I'm like, I think the upside, I'm hoping on the ARC hype that it'll move. So I think the biggest message here is rather than worry about what's going to happen, wait for confirmation to come back. Add to things you have high conviction on, views it as a discount, but really just look at your overall portfolio. And you can't go wrong with Apple. You can't go wrong with Amazon. All those things I think you can't go wrong with. And history will show what actually is going on when the dust has settled.
Yeah. About to put this guy in timeout because he can't stop just putting it in here about shorting Apple. But good luck to you. Good luck to you, pal. But yeah, I mean, and we just got done recording a video that will be going out tomorrow, and we were talking about Apple, and I think that it's one of those things where it just continue. We talk about stonks and how stocks always just go up, and the Dave Portnoy thing. If Dave Portnoy just kept buying Apple, he'd be in good shape instead of buying GameStop, which brings me to my next topic of conversation, and that is just the GameStop debacle continues. The drama ensues. I think what happened yesterday going into today had nothing to do with Wall Street bets and had nothing to do with retail in general. It was just another hedge fund sticking it to another hedge fund, and retail Wall Street bets was just along for the ride.
Yeah, and let me just clarify one thing. So a recession is actually 2 consecutive quarters.
So we were in a recession.
So by that metric, we were. So I just wanted to make sure we amend anything because I know if I don't, that's going to.
Oh, we would get roasted. Yeah.
I thought it was 4 quarters. So
I think 4 quarters is a depression, right? One's a recession, one's a depression. But anyway.
Okay. So. Well, all right. So what's the question? I mean, it's like.
So, yeah, I know. So for those who don't know, if you're living under a rock, GameStop went the hell off, went all the way up to $200 a share after hours. And then AMC, all of the meme stocks went crazy. Dave Portnoy bought the top and lost a bunch of money. Who knows if he held? I don't know. I haven't been able to keep tabs on him. But people were like, oh, Wall Street bets are at it again. And to be fair, Reddit blew up. It actually crashed again. But the Redditors were not responsible for what happened with GameStop yesterday. And I think that it was 100% just a hedge fund sticking it to another hedge fund. And then everybody else was just along for the ride.
That's an interesting theory. Do you think that the whole Vlad the Impaler scandal, do you think that was retailer? Because a lot of people are saying that's not retail. Although everybody was saying it was.
Well,
it's a yes or no question.
That's a different.
Vlad.
It's you're comparing apples to oranges. I think. Like so.
Hold on.
Like you're asking about when Robinhood basically stopped trading and only allowed people to sell.
No. I'm saying before. So listen, Vlad. This is what he did in the congressional hearing. The yes or no question. The initial move before Robinhood shut down. The initial GameStop move. Do you think that was retail?
Yes.
Okay, you do?
Yes.
Because that was the storyline. It
was sparked by retail, I think.
And now people are trying to say that actually it was institutions. It wasn't.
I don't
know if you've heard that or not.
I think it was sparked by retail. The initial GameStop short squeeze was sparked by retail. But then, obviously, if I'm a hedge fund and I see what's happening, I'm going to dump a bunch of money into this and squeeze them up too. So, yeah, I mean, I think it started with retail, and then they moved it up, and then institutions came in and pushed it up even further. This time around, I think it was the opposite. I think it was more along the lines of, oh, my God, so this is starting to move up. Everybody on Wall Street bets is like, oh, my God, here, it's starting to move, and everybody else pile in. And I think it was almost kind of like the reverse happened this time around.
Yeah. Why, though? I don't understand why. What if you're – I don't know.
That's a great question because nobody knows. Right? Nobody knows right now.
So, GameStop, what's GameStop up currently?
I can look.
So it's up 26%. And it was up, 100% yesterday?
Yeah, and it was another 100% after hours.
The interesting thing is that AMC is not up, which it was up yesterday. It was up yesterday. Had a great move yesterday. That makes sense that would be it, could be it. The timing's interesting, though, too, because of the interview that Dave Portnoy had with Vlad. So that's interesting timing as well.
Yep.
I am of the belief that Reddit is now the people's hedge fund. So I don't put anything past it. But I wonder if this is a cup and handle that's forming.
On GameStop?
I'm looking actually at AMC.
Oh my God. Let's see.
I was just kidding. It's not a cup and handle. Yeah, man. It has had a crazy move, but if you were in it, you're still down at least 50%.
Well,
it's crazy.
Yeah, if you're in it at 400 plus, yeah.
No. Hold on.
If you bought it at the high yesterday?
No, if you were in it in the move when the initial move happened, if you bought it 400 plus, you're down way more than that. But,
right.
If you were in it like around 250, you're still down 50%.
Yeah.
If you were in at 250.
Right.
So like this move has been nuts.
Yeah.
But the crazy thing is like, I have no problem with people playing the volatility. And I think that's where people get a little bit confused. Like somebody said something to us about CCIV. Well, CCIV, we weren't bullish on. Like the move was made. We felt like you were trying to chase.
Yeah.
And it dropped 60% the next day. I was fine with people who want to day trade. I think that's a great day trade short-term swing. I think that's great.
Yeah.
The people that are holding, it's a different story. I text one of my buddies who was like, hey, should I get in CCIV when it was running? I was like, don't touch it. And then when it was down 60%, I was like, hey, if you want to try it, now's the time to try it.
Yeah.
Try to make a move for it. So some people who are just trying to make a quick buck, and there's people who are successful in the market playing these moves, these overreactions. I'm okay with that, as long as people like understand what they're getting into.
Right.
And it's essentially gambling, which is okay. That's fine.
Yeah. I mean, if you want to risk money that you can afford to lose on something like that, cool. I was talking to people today. I was just like, if that's money that you're willing to lose, fine. Okay, cool. Either you're going to use it on a scratch off or you're going to put it in the market. So if that's the plan, fine. But if the people that are whole accounting this kind of stuff is what's driving me crazy.
Yeah. Also, we need to mention that now that we're coming towards close is
Earnings, baby.
Earnings. So we have a lot of earnings today. Listen, the highlight is Rocket. We've been waiting for Rocket.
Yes.
And it's going to be anticlimactic. I'm going to tell everybody.
It 100% is.
But we're still here for the show.
Low expectations.
So after hours, some of the highlight ones, we have a good day today. We have Salesforce today.
Yes.
We have Rocket today.
Yes.
We have Etsy today. We have Airbnb today. And perhaps the biggest earnings of all is BYND. You're like, what is this fool?
I was like, what the fuck? Yeah, so a big earnings day, really. I think it's going to be big. And which one? Okay, outside of Rocket, which ones are you looking forward to the most? You probably aren't even looking forward to Rocket, I would imagine. It's just going to be there, and we're going to, if it moves, it moves.
So I would say, I know which one yours is. I think CRM.
Okay.
It's a toss-up between CRM and Etsy.
Yeah.
But I would say CRM is going to be the one.
Which
I
one?
think yours would be Airbnb.
Oh, no, it was Etsy.
Oh, Etsy.
Yeah.
The only reason I wouldn't say Etsy is because I feel like it's just a matter of growth and guidance.
Yeah.
And like I like the stock. I love the stock. I love the stock. But like, I think there's more exciting things that I want to see come out from other things. Like, I'm not sure what Etsy's going to say.
Right.
But like Airbnb, we talked about how they probably, from the travel industry side, recently IPO'd. This quarter is going to be really telling. And they kind of came in at a good time, we think, because the bars were set really low. So their guidance is going to be interesting. I don't want to speak for you, but I think you agreed with me when I said that I feel like Airbnb comes back before hotels come back.
Yeah, well, and it kind of has.
And so I think actually getting the data that shows that and saying, okay, what is it? Like, what do you guys have as far as metrics, not mere speculation and like hard numbers, and guidance moving forward is exciting.
Bro, it is so funny because I was listening to the CEO of Booking.com talking about, the earnings and how they came in and weren't all that great and all this other good stuff. And he was asked about, short-term home rentals and, how he feels like he's going to be able to compete with Airbnb. Yeah. And the funny part, the response was, well, we've been in it for a long time already. And we're prepared for this. And my thing was like, well, if you've been in it for this long and you're so confident, why haven't you made any kind of moves in that market? So it just made me laugh a little bit. But I think Airbnb does continue to take up market share. And I think it's Kathy Wood made this comment about just disruptive technology and the companies that they're involved in. Are they in the Airbnb?
I don't know offhand.
I feel like they should be, but
I can find out for you.
So she said that we're in a time where companies that are disruptive right now are in a winner take most situation. And I think Airbnb could definitely be that, and I think it probably already is. So sorry.
Yeah. I mean, who would you consider their competitor? Like a legitimate competitor that if you were Airbnb, you'd be worried about.
I mean, maybe Expedia. Yeah. Something along those lines, or
but Booking.com is tried to do it, and maybe, but I still think they're so far away because you just think about the sentiment towards Airbnb.
Yeah.
Like, again, you talked about Zoom being a verb.
Yeah.
That was a video we recorded. By the way, guys,
it's coming.
Check out our video tomorrow. We do our top stocks for March. But Airbnb is a verb.
Right.
Right?
Right.
Like, I don't know what it's called. You just said it. I don't know what it's called.
All right.
So I say Airbnb. I'm an Airbnb a place. So I think they, like Tesla, have just such a big lead that it's going to be hard for people to catch up. And people don't talk about their experiences. Like they have other revenue streams, so they can focus on stuff like when you get to a city, you can pay for experiences, and that generates money not just for Airbnb, but it also generates money for the gig economy.
Yes.
And people who want a side hustle, and that's huge too. So they can focus on those things with this lead that they have against their competition, while their competitors are just like, well, we just need people to stay in our places.
Yeah, well, not only that, but think about when we talk about remote work and how it's here to stay, and to your point about gig work, if I'm somebody, and we just talked about just about what we do, we have the flexibility to do this anywhere.
Yeah.
Like we literally could pick up all of our stuff and move it wherever we want to, and we could do a live stream, we could record and do whatever. And more people are falling into that category. If I just want to go up and work in, I don't know, some sort of nice vacation spot for a week, I can still enjoy myself and still continue to work, and I can do all that through Airbnb.
Yeah, absolutely. So we have Airbnb, we have Etsy, which is a huge gig economy opportunity. CRM is one, and we'll touch on this quickly. The reason why I'm most excited about CRM is because I still don't think the markets realize this is a vaccine play.
Yeah.
And also, reopening CRM is a great reopening play because they benefit when businesses come back. Their main platform is based on salespeople being out in the streets, and they're not out there right now. And so CRM benefits as a vaccine play. They partner, we talked about Microsoft, Oracle, and the Mayo Clinic for the Global Passport program. So they're part of that coalition. And not to mention, they're selling their software to municipalities. That's all, folks. Municipalities to track the vaccine process. So I don't think a lot of people realize that. I don't think the market, they're starting to realize it. And we've been talking about this since like 2015.
Yeah.
But that's a huge opportunity. And I'm excited for Salesforce to talk about that this earnings. I think they will.
Yeah. Right now, I'm looking at Salesforce. Hold on. And I see it at 231. So it came down. We can start looking at the charts now, but it came down and is sitting not quite at an area that I would consider support. It's getting close, maybe 228, somewhere around there. But it looks decent. Put it that way.
Somebody was asking about Open Door or Rocket.
Oh God. I guess at this point we'll just have to see how Rocket looks after earnings, but I probably would go with Open Door. I would go with Zillow over all of them.
You would go Zillow over all of them?
Yeah.
Zillow, Redfin, Open Door, Rocket.
Yeah.
Rank those. Zillow's one.
Zillow's one. It's tough because Rocket is a good company. Rocket after hours, by the way, is up 3%. We'll continue to watch this, but that's really, really tough.
To me, Zillow and Rocket are 1 and 2.
Yeah.
And
if we're going by the company themselves, then yes, Zillow, Rocket.
And
we're not paying attention to the stock.
Yeah. And for reopening, I'm actually still going to give Rocket the edge. It's an unpopular opinion, but I'm going to do that.
I'm fine with that.
All right. So Rocket's earnings, expected earnings for today. So what we're looking for is earnings per share is 86 cents, and revenue 3.84 billion. So let's look out for that. It's just the thing with Rocket is it came into the market. It already has such history and such big numbers. I think the issue is them trying to outperform. Should see huge revenue growth for Etsy. Let's see if we can pull anything up. So I'm gonna go check on Twitter to see if there's any news, and as soon as we hear the earnings, I'll let you guys know.
We forgot about Nikola having earnings today.
I was just gonna say Nikola, Virgin Galactic,
yeah,
SPCE also. There's a lot. First Solar's.
Speaking of a lot, there's 423 of you guys hanging out in here live. We appreciate you hanging out during our earnings reaction. If you guys could give us a thumbs up, we certainly would appreciate it, and all that good stuff. While we're waiting for earnings to come in, also want to invite you over to join the Chaos Crew. If you guys don't know what that is, you simply just click join next to subscribe, and you can get a daily watch list from us as well as access to our public portfolios. It costs $4.99 a month starting out, so there's really not a whole lot of risk there. If you guys just want to be a part of the crew to help support the channel, we certainly would appreciate it. Hit join next to subscribe, or the link is in the description. Love to have you as part of the crew. Anything yet, Fat Man Zoom?
Nada.
Okay, so just checking out After Hours. After Hours looks like things are relatively green for the most part. Kind of hard to look at this or it's not hard to fathom given the fact that market was so red, but what the hell? Nikola's up 4.5% after hours.
I should say though, the one thing I wish Rocket ran up. I wasn't surprised it didn't run up because of the market being so beat down.
Yeah.
But again, it's still holding up really well.
$20 is it's solid.
I mean, you can take it to the bank.
You really can. All right. So checking in on Salesforce. Salesforce is up slightly. No official word yet on those. Nikola, I guess, beat expectations. They're up 5% so far. And let's go ahead and take a look at Etsy, see where we're at there. 2.25. So Etsy, so far, so good. This is one that I was looking forward to. So I like this one. SPCE, Virgin Galactic, also had earnings. That's up 1% after hours. Airbnb. I think the lockup period for Airbnb is coming up soon, if I'm not mistaken. They're up 1.5% after hours.
Yeah, Nikola beat. But I'm not.
Where'd the revenue come from?
Loss of estimates were a loss of 23 cents. It came in at a loss of 17 cents a share. But it's interesting because there's other things that are saying it beat by 17 cents, which that number doesn't make sense.
Oh, here we go. Etsy's moving. Etsy's boner candle on Etsy. It's up 5.5%. Blast off right over $200 a share.
Loss of 38 cents. That was what Nikola was.
For Nikola?
Loss of 17, yeah. Sorry, go ahead.
Etsy is shooting up after hours, up 5%.
Nice.
Over 200.
There we go. That's promising.
There we go. Airbnb is also up 3% after hours now. It's climbing. Looks like we might have some numbers coming in here. We'll update you guys as soon as we get them. Rocket is up 1.5% after hours. Nothing yet.
Can't you go up 30%, Rocket?
From any of them? No.
1.5%.
Salesforce is up 1.5%. Starting to move a little bit.
All right. What do we got?
So some of these earnings are looking really solid. Etsy's up 7.5%. It is rolling.
I think they had anticipated 90% revenue growth year over year, if I'm not mistaken.
Holy shit. Are you serious?
That's what I thought anticipated was. Looking.
Wow. Look at this thing. Etsy is rolling. 8.5% up. It's about ready to pass today's high. Just did. Now up 8.5%. Damn. Hell of a move off of Etsy so far. Airbnb is still up pretty solidly, up over 3% after hours. And yeah, still just wait. Rocket's up 3%.
There we go.
Not quite 30, but we'll take it.
I'll take 8.5% too. I'm looking at. I'm actually not seeing Etsy numbers yet.
Really?
Yeah.
Okay.
But we'll go ahead and let's look for. What do you want, Rocket or Salesforce?
Let's check out Rocket, see what we got. People are saying in the chat, Rocket dividend.
That's what I was going to say. I should have said that. I'm looking for share buyback.
Yeah, they announced that last earnings.
Rocket Companies experiences explosive growth. Revenue increases 144 year over year to 4.7 billion. Company announces special dividend of $1.11 per share.
Hey, I'll take that.
Hell yeah, I'll take that.
I'll take that.
$1.11 a share. I'm gonna, woo, woo. It's a 5.5% dividend.
There we go. Now it's moving. Rocket up over 21. It is up 5% 4.5% now. It is all over the place. This is very volatile after hours right now.
144% year over year growth. That's incredible.
Yeah, why are people not buying the shit out of this right now?
Well, this stock needs to be over $24 tomorrow.
Here we go. It's up over 21. 5.75%. I gotta imagine the shorts get squeezed out of this.
If they do,
I mean, 40% short interest, and this thing doesn't blow off on those types of earnings. That's crazy. No, I don't want your answer, Don. Keep your shit to yourself.
his answer what?
I don't know. He just says, "Want my answer." Just being a smart ass, typical Don. Rocket up 5%. Etsy coming back down here a little bit. Any word on those earnings just yet?
No, not yet. The problem is,
Oh, the cam's off. Oh, is it? Oh yeah, it is.
here we go. I got it. All right, Etsy. Boo, man. Earnings per share estimates 60 cents. They beat $1.08. Revenue, they crushed. 517 million was expected. They came in at 617 million. They beat by 100 million.
Damn.
Guidance moving forward, 536 million versus 379 estimated.
Yep.
All this looks great. Active sellers up 76% year over year. Buyers up 61% year over year. EBITDA up 251% year over year and 192 million.
Damn.
Crazy numbers. These are incredible.
These are all great numbers. In my opinion, they should be bought up. I think we're losing battery on the cameras. The main camera's out, so we'll just stick with you. Looking at...
Looks like CRM beat earnings per share, beat revenue, raised guidance. Let me see if I can get some numbers.
Yep, they are... Well, they're up just slightly after hours right now.
Yeah, so earning per share, 28 cents. They beat by 22. Is this right? They beat revenue by 140 million, so they came in at 5.82 million.
Yep.
All that looks good. Yeah, so earnings per share, $1.04 versus 75. That's what I'm seeing.
Etsy trying to claw its way back. And Salesforce just went red after hours. Airbnb is up 4%. Rocket is up 5.5%. Come on. Come on, you SOB. Up over 21. We're getting close, people.
Airbnb revenue, $859 million versus estimated $739 million. Oh, we're going to get $1 billion quarter this year.
There we go.
They are not providing 2021 outlook.
Well, it's not stopping it from being bought up. It's up 4% after hours.
I mean, they crushed revenue.
Yeah. All of these companies did. Except for Nikola. Looks like Virgin Galactic might have missed. They're down 7%.
So, all right, so SPCE, it looks like loss of 31 cents, which is in line.
You have another plane crash? Beyond Meat. Looks like some people are chatting about Beyond Meat. That is up 4.5%. Jason Toscano says, I forgot to trim my SPCE. That sucks. Now it's down 9%.
How do you forget
I don't know.
to trim SPC?
In Jason's defense, he's a young trader.
Bro, you were here. You were here. You were looking at your account. Come on, Jason. You're better than that, bro. Man, all our tech is kaput.
I know.
We're going to the old school way.
Yep. What, did yours go down?
Yeah.
Beyond Meat is now up 8.5%.
Oh, man.
Damn. Etsy's trying to claw its way back. Rocket trying to do something. It's pulling back here a little bit. It's up 4.25%.
BYD announces strategic global agreement with McDonald's, preferred supplier for the patty in the McPlant.
Damn.
I thought they already had that. I guess
No,
that was
it was
a beta test.
Yeah. It was
beta
just just a test.
So that's official. That is huge.
Oh yeah, First Solar had earnings too. I forgot about that. People are saying First Solar did well. Just take a look at that real quick. Yeah, it's up 3%. Not too crazy,
So
but
it's a 3-year agreement with McDonald's and Yum Brands as a whole. So that's really good. That's awesome.
yeah.
FSLR.
Yeah, First Solar's up 3.2%.
They missed.
Oh.
So First Solar estimates were 123. They came in at $1.08. Revenue estimates were $720 million. They came in at $609 million. I don't know what they said.
Wow.
Oh, I think it's their guidance. So, yeah, that's what it is. It's their guidance. Earnings per share, is it? No, it's not. So earnings per share, this is their guidance for fiscal year 2021. $4.75 for the year, which is kind of in line. Sales, $3 billion. So, I mean, that was in line with what they've been estimating, and then they slightly raised the earnings per share. I don't know what else they said in there that could have maybe done that.
I don't know. Beyond Meat, though, is at 17%. The big wiener of the day is Beyond Meat. God damn.
Is McDonald's doing anything off that? Probably not.
Yeah, because it's probably not. I mean, it might be. Let's see. It's probably not as big of a deal for McDonald's as it is for Beyond Meat. Yeah, McDonald's is pretty non-reactionary. It's flat.
Man.
But a big deal for Beyond Meat. That's crazy.
How's Rocket doing? How's my little baby doing?
Let's not talk about it.
It went back down?
Yeah, it's down 3%. Or not, it's up 3% from 5.5%.
I'm okay with that. A couple people took profit.
Yeah,
Let's move it back up.
that's cool with me.
I like that special dividend.
Yeah, I mean, hey, I'll take it. You're going to give me some free money. It's fine.
Yeah, these numbers are really, really good for Rocket. I'm happy. You know, when they have the earnings call, let's see what the CEO has to say. And
Right.
really what people are going to care about is guidance.
Yep.
Especially for housing. They want to know the sentiments around the housing market. We talked about this, though, before. It's not just about mortgages.
Yeah.
Like, they have subscription model services. They're, it was like Real Estate Pro or something, which is another monetization opportunity, another revenue stream. Really aimed at realtors as well. So I think that's huge, you know, and as a whole, they have multiple companies within. So my hope is that they're able to articulate the growth opportunity they have.
Yeah.
You know, they're their problem is that they came in and they have 12 years of amazing numbers. And how do you continue? You know, you got 4 billion. Like,
Right.
you know, I think people are so used to these Etsy and Zoom type booms for younger companies.
I think the plus side for Rocket too is that we're heading into the spring and summertime, which is peak time for home sales and all that good stuff. So I'm wondering if maybe it ends up becoming more of a cyclical thing. We could see this move up as it gets warmer out too.
Yep.
I think that's going to do it for me.
Yeah, I'm good.
Folks, thanks so much for hanging out. And let us know what you think about the setup.
Yeah.
We're always liking to hear about your feedback and what you like better and all that good stuff.
Don't forget to like and subscribe. Click the notification bell because tomorrow you don't want to miss our top stocks for March. Top 10 stocks.
10 of them.
Top 10 stocks. We're going to be in the live chat when that it's a pre-recording, but when it premieres, we'll be live chatting with you. 8 p.m. Eastern time. And also don't forget Stock Watch Sunday every Sunday at 7:30 p.m. Eastern Standard Time.
That's going to do for us. Thanks so much for hanging out. As always, I don't know. Have a good one.
Bye. I quit.
Oh.
I quit this bitch.
See you guys.